Many cryptocurrency investors have had a horrible year due to the crypto crash, with many exchanges temporarily suspending trading. However, despite the dismal macro projections, several notable cryptocurrency analysts feel that the most recent crash in the cryptocurrency market is a positive indication for the industry as a whole. Which exchanges were affected the most? What resulted in the closure? And why do analysts feel that the crash is a good thing? In the world of cryptocurrencies, crypto lending is functionally equivalent to banking. Users of cryptocurrencies who utilize crypto lenders to deposit their Bitcoin or Ether are similar to customers of traditional banks in that they receive interest on their deposits. However, this interest is often paid out in another cryptocurrency. The historically low interest rates have resulted in traditional bank accounts providing just a pittance of any return. On the other hand, the cryptocurrency lenders are giving noticeably higher returns, up to a maximum of 20%, depending on the tokens being deposited. Crypto lenders make money by digitally lending tokens to investors or crypto businesses who may use the tokens for speculating, hedging, or operational cash. Lending digital tokens to investors or crypto firms are how crypto lenders make money, for a charge, often between 5% and 10%. They generate revenue by taking advantage of the different interest rates that apply to their deposits and loans. Over the past 2 years, there has been an interest in decentralized financials, sometimes known as DeFi systems. Traditional financial institutions, banks, and credit unions act as gatekeepers for various financial services and products, including loans and other financial commodities. These gatekeepers, however, have too much paperwork and processes. When it comes to lending or borrowing cryptos, the crypto lenders promise to be more accessible than banks and require potential customers to deal with less paperwork than traditional financial institutions. According to the industry site DeFi Pulses, the total value of cryptocurrency held at DeFi sites reached a record of $110 billion in November, marking a five-fold increase from the same month a year earlier and reflecting highs for Bitcoin. Cryptocurrency lending platforms have received assistance from various financial organizations, including the Caisse des Dépôts et Placements du Québec, Canada's second-largest pension fund, and Bain Capital Ventures. What is the catch? In contrast to traditional banks that are subject to regulation, crypto lenders are not subject to the scrutiny of financial authorities. As a result, minimal rules control the amount of capital that crypto lenders must have or the degree of transparency they must maintain. Customers who keep their cryptocurrencies on these exchanges face the danger of having access to their funds disabled. This is because crypto lenders face many potential threats, including technical breakdowns and hacking, in addition to the inherent risk posed by the volatile nature of the cryptocurrency markets. As a result of the tumultuous state of the market, the Bitcoin lending and trading firm Vauld, located in Singapore, has temporarily ceased operations. The company said all trading, deposits, and withdrawals had been suspended. The company has asked the consulting firm Kroll Point Limited, which specializes in financial matters, and the law firms Sil Armstrong Mangaldas and Raja & Tan Singapore LLP to investigate any and all possibilities and provide assistance in finding a solution to the problem that it is currently facing. Vauld said that $197.7 million had been withdrawn from the company since June 12, 2022. The demise of Terra, the financial difficulties of Celsius Network, and the default of its financing by 3AC were some of the reasons for the massive withdrawals. Because of this, the company was forced to lay off 30% of its workforce just 1 month ago. This led to a direct decline in profits. The business has also slashed the compensation given to its executives by half. As soon as the announcement was issued, this sparked fear among users of Vauld. They stated that the corporation should allow consumers to withdraw their cryptos. Most said it is against the law to keep investors' money without their permission. This is not the first time that a lending firm such as Vauld has suffered significant losses due to the present slump in the industry. BlockFi, a lending firm in New Jersey, has recently encountered financial problems and has decided to accept a revolving line of credit from the cryptocurrency exchange FTX. According to Zach Prince, the chief executive officer of BlockFi, FTX has an option to buy BlockFi for up to $240 million. However, the purchase is contingent on meeting certain performance objectives. Another firm that lends cryptocurrency, Celsius, likewise stopped withdrawals at the beginning of this month, citing liquidity concerns. The chief executive officer of Binance, Changpeng Zhao, has leveled the accusation that these companies, most notably the Vauld platform, are overly reliant on venture financing and do not have a clear-cut business strategy. Babel Finance is the second major digital asset lender to halt withdrawals this month. In a statement to its customers, the company explained that it was dealing with major liquidity difficulties due to recent market declines, which hinted at increasing unrest in the cryptocurrency world. Celsius Network recently suspended withdrawals and swaps to stop the corporation from going bankrupt. A tweet by Three Arrows Capital earlier this week sparked concerns over the hedge fund's potential financial issues, reinforcing the general impression that the cryptocurrency market is in a state of widespread misery. As of the time this video was made, the total number of all cryptocurrencies has dropped below $1 trillion, representing a significant drop from their peak value of $3 trillion in 2017. In May, Babel received a valuation of $2 billion due to an investment round headed by Generation Capital and 10T Holdings. The website for Babel says that the company's current investors include Sequoia Capital and Tiger Global. Since China's ban on the industry, Babel has shifted its focus to include a wider variety of institutions as its core clients. According to the company, it serves over 1 million individual retail investors. Many of the exchanges are facing consequences of the implosion of Terra USD and Luna that occurred a month ago. These implosions resulted from loosely managed decentralized finance that went horribly wrong. Market decreases are causing many companies to feel these repercussions. Voyager Digital has also ceased all customer trading, deposits, withdrawals, and loyalty reward distributions, according to a recently published statement. The chief executive officer of the lending company, Stephen Ehrlich, remarked that this was a very challenging decision. Nonetheless, they feel that it is the proper one given the current market conditions. After that, Ehrlich stated that the decision was taken to give the firm further time to continue exploring strategic alternatives with various interested parties and that they would share additional information at the appropriate time. Voyager, a digital broker, is the latest company to fall victim to the current bear market after a succession of margin calls and defaults across the crypto industry. Since their all-time highs, Bitcoin and Ether have both seen declines of over 70%. It comes only days after one of Voyager's clients defaulted on a loan worth several billions of dollars, igniting worries of a bankruptcy contagion that might spread throughout the sector. It was recently disclosed that the prominent cryptocurrency hedge fund known as Three Arrows Capital, TAC, had failed to make payments on a debt to a broker worth $670 million. It sent shockwaves across the business when co-founder Zhu Su tweeted that the company was in the process of engaging with relevant parties and entirely determined to straighten things out. Kyle Davis, one of the co-founders of Three Arrows, was interviewed by the Wall Street Journal and stated that the company is considering either selling its assets or being acquired by another company. Because of the worldwide economic collapse that occurred in 2008, many governments were compelled to intervene in their financial systems to restore stability. It was a defining moment for many people's trust in their governments, which was rocked to its very foundation. On the other hand, this year's events were nothing similar to the previous ones. The value of cryptocurrencies fell precipitously as fears of inflation roiled economies worldwide, and investors rushed to assets with higher levels of security. Others have lost everything. But if you've made it this far, there is reason to hope that whatever happened this year was only a temporary setback. On the crypto calendar, 3 important events might substantially impact the direction the cryptocurrency market takes throughout the year, as well as the larger macroeconomic situation in the United States. On July 13th, the data about the monthly consumer price index, CPI, and other aspects of inflation will be made available to the public. On July 26th and 27th, the Federal Reserve will announce its decision on whether or not to hike interest rates further. This will decide whether or not the United States is technically in a recession. The preliminary estimates of the GDP for the second quarter of 2022 will be made public on July 28th. Recently, popular cryptocurrency tokens experienced significant price increases. However, cryptocurrency investors' fear and greed index has not budged from its extreme level of caution since it was last updated. Do you think we will see a positive upturn or a continued deceleration? That's all from this video. See you in the next one.